Good morning. Good morning, everybody. How are you? Oh. I have an echo. Let me fix my echo. All right. How are you all doing today? Another day in crypto, right? Today we're going to be looking over some charts. Already covered some of the mistakes I made yesterday so that you guys don't have to make the same mistake. I just saw an update in our group from our esteemed leader, Mr. Nick D. I thought it was great, actually. Nick was just reminding us that, we're seeing some shit going down in crypto. And he was saying this is the third cycle that he's been through where this stuff happens. And it's just his thought that even though we're in a very, very strong bearish market, Bitcoin has held up. We've had FTX collapsing, we've had massive rug pulls, and a huge retracement from the NFT market. But still, Bitcoin has held. It's not looking as good as it was, but it's held. Point is, we are not here to hold crypto. We're not here to talk about crypto benefits or talk about which coins are going to be the best coins to invest in. We are not investors. We are traders. And we're going to be trading until there's nothing to trade. Nick was saying he remembers ETH trading at $14.50 in 2017, and it's at 1,100 now. Now, of course, guys, nothing I say here is financial advice. Just my thoughts on the market, and here I'm just reading Nick's thoughts on the market. I'm not trying to tell you to buy or sell any sorts of crypto. I'm not into that kind of thing at all. I'm just here to show you smart money concepts. And hopefully that makes you a lot of money, and hopefully it makes me a lot of money. So if you're watching this on the replay, and you're watching this on YouTube, thank you so much for watching. Thank you for trolling through the old videos, as I am sure it is for you right now. I'd love a like and subscribe. It's free. And if you're watching this on Twitch, let me know. Let me know in the chat if you are watching. Let me know what charts you want me to look at. Let me know what questions you have. I'm here today to answer some questions. We had some new guys in our group with some questions. One of those questions was, what do we do with a fresh new chart? What do we do if I'm new at this and I don't know what I'm looking for? How do I just start charting? And I'm going to show you that today. We're going to go through a fresh chart and where we start with when we're looking for what we want to do on that chart. How do we even know where to begin? It's a good question, and we've all been there before. We're going to review where the charts are at. I haven't even looked this morning at the charts. I haven't even looked. I don't have any active trades on at the moment. So I've been looking for some opportunities this morning for sure, but I don't have any trades on just now. I took them off because I wasn't quite sure where the market was heading. I do have some trades in the system that are waiting to get picked up. I've got 3 trades in the system that are waiting to get picked up, and I'll show you what those trades are today for sure. So before we look at anything, let's take a look at the DXY. I've also decided on something new that I want to do. And this will be something I'll show you guys right now. Before I do anything, before I get too carried away. Based on yesterday, I mean, this is the first time I've ever been streaming myself trading. I really found, this is some self-feedback here, I really found it way too easy to get caught up in wanting to show you guys a trade. So I took a trade that I really shouldn't have taken. So what I'm going to be doing is setting some rules for myself to follow. And I've done this before in my day-to-day trading. Setting rules is so important. And we need to make sure we're setting those rules and following them. So I've written down 4 rules that we're going to follow. One moment. Let me just grab those up. I just want to make sure that my rule hotkey is going to show up. So rule number 1. That didn't work. That's really annoying. It did pop up. Rule number 1. It just popped up help. So I'll probably have to change these from function keys. All right. What is rule number 1? Rule number 1. We are only taking shorts at premium prices. And we're only taking longs at discounted prices. That's rule number 1. That pop up rule number 2? Perfect. Excellent. Rule number 2. Rule number 2. We are not trading when we're at 50% of the range. So that's not going to happen. I'm not going to be trading there. It's not a good place to trade. Price can go up, price can go down, price can go wildly up and down. Because we're not trading with an edge. One thing Nick teaches, we trade with an edge, or we don't trade at all. Rule number 3. We must be targeting the next OB. And the return for risk needs to be at 3 or above. That's rule number 3. If we can't get a trade that's nearly guaranteed to get us the 3-to-1 return on our risk, it's just not worth trading. Rule number 4. Stop loss needs to be 25% of my trading order block. And my stop loss needs to be set when my bias is wrong and will change. So we'll go into that a little bit later on. But if the price breaks through my stop loss, it needs to mean that overall my bias changes from whatever it was to whatever it is now. So I shouldn't be able to lose my trade. If I'm bearish, I'm taking a short, I shouldn't be able to lose my trade. And all of a sudden, I'm still bearish. I just lost. Well, that's not trading with an edge. We're here to trade with an edge. We're here to make money. We can't make money unless we have an edge. Otherwise, we're just gambling. So those are the new rules that we'll be following. And what we're looking at right now is the DXY. This is something that I've come to include in my daily reviews of the market because it gives us a rough indication of where things are traveling. Roughly, overall, big picture. Now, I was predicting the price of the DXY would come up to this order block here, meaning that the amount of money in crypto would decrease. And what's happened here, surprisingly, is the amount of money in crypto has increased slightly. It's come down. Could it be that we won't see this point here? Maybe. Maybe I was over-enthusiastic about where the price would come up to. That could absolutely be the case. I hope so. But we could still see a sharp rise up and then down. So I'm not changing my overall view just yet. But we do need to know that the price has come down for the DXY, and that means the crypto price has come up. So they kind of counterbalance each other. When this price comes down, the amount of money in crypto goes up. That doesn't always mean that Bitcoin bounces, although generally speaking, it's the first to bounce. And then other coins follow. That makes sense so far? Let me know if you have any questions. Let me know if that makes sense. We're here to learn, guys. I'm here to learn by teaching. I always found that's the best way to learn. Can we show an example of how to make a 25% stop loss on the order block? Absolutely. We'll be doing that today. I'll be definitely making some. I don't know if I'm making trades today. It depends on what I see in the charts. but I will absolutely be putting some examples up. Now let's start with the big bad boy, Bitcoin. Where are you at, Bitcoin? All right, let's remove everything. I've got some ideas already for Bitcoin that I've already got implemented in my trading platform, Bybit. But we don't need to worry about those just yet. We'll do a trade on Bitcoin. I won't necessarily put the trade in, but I'll show you how we do the 25%. I'll show you how to get it exact as well. All right, let's look at the chart at the 4 hour. 4 hour is one of my favorites. 8 hour is my even bigger favorite. I love the 8 hour chart. The movements you can see are incredible. When we're doing our charting, the very first thing that we need to do is clear all of our junk. Let's just pretend we don't have anything at all. And I'm coming in fresh. Fresh for the week. So we have this chart here. Now what do? We take a look at the recent times. Now, this particular chart, because I'm looking at the 8 hour window, this particular chart is going all the way back into July. We don't need all of that right now. We can see, however, from July that the price did go up. And the price came back down to this sort of medium range. So we could say, in terms of July, in terms of a monthly trend, this could easily be what we might call the middle figure, the middle of it, the middle of the range. It was, for a long time, the middle of the range was right here. And what do I mean by middle of the range? Middle of the range means it's the middle of how far it will go down and how far it will go up. And for a long time, for months, we were trading on this particular price structure. It was a great structure of price to trade on. Lots of us made a lot of money. It was fantastic. And the rules that we had were when the price comes up to this line here, we don't make trades. We were looking for shorts down here at the bottom of the range. And we were looking for longs when the price was other way around. We were looking for longs down here, and we were looking for shorts up here. Now, we've moved. Price has dipped again, and now you could say we're at a discount. But it's not that simple. You can't just say because we were at this price structure up here, we're now at a discount level. It doesn't quite work that way. Yes, we are at a discount compared to this price structure up here, but we're not in this price structure up here anymore. We have fallen to a brand new range. And in this range, you can easily see, unfortunately, this range is a bit smaller than the previous range. I like bigger ranges. Bigger ranges are great. We can see if we draw a line through the center of this range, we are currently dead smack in the middle of this range. Let's just confirm that this is the middle. So this is a fib. This is a fib tool. Now, a lot of retail traders will use the fib tool. They call it's the Fibonacci tool. The retail traders are going to be using this to find the Fibonacci sequences that they think are more likely for us to get good trades in. I can go over that when we get to it, but they love the fib tool. They just find price. They always say price comes with a 50% margin, and between the 50 and 60%. See how it's gold? It's a golden color in this one. It's because that's where retail traders love to take their trades. Me? No. Not a retail trader. I know a lot of them are trying to grab their prices at the 50% mark. I go higher. I want to take those stops. I was a bit off. That's why we always use the fib to test. I'm not using the fib to know where Fibonacci says my price is going to go. I'm just using it to measure. And this is the 50% mark here. 50% of the range, and we are awfully close to that right now. Not a great time for longs. In terms of longs, this is kind of the no man's area. A lot of people in our group, well, not a lot, a few people in our group were clever enough to get their longs in down here, and they did well. I made a mistake yesterday of taking a long right here. It was a big mistake. I got caught up, and my stop loss got hit. It was just so easy for me to turn into a retail trader. It just happens. So let's not do that. So we're at the 50% of the range. I'm going to keep that range line just there. That's the first thing we want to look at when we're charting. Second thing we want to look at is, what do we think is going to happen? Well, it looks like we've had a lower low. We've come back up for our lower high. We've had an even low, lower high, higher high, lower low, lower low. Sorry, lower high, lower low. Where are we going from here? If we can't break this order block right here, which has already been mitigated, and what I mean by mitigated is we have an order block here at the 8-hour level. It was an order block that happened just before this price dip here. Price came down. We've already had price come back up and bounce off it. Every time price comes into our order block and takes those stops out, it means it's easier for the price to go through the order block. The number of times the order block gets hit, it means there's more chance that we'll go straight through the order block. Now, I saw this yesterday and I thought, beauty, fantastic. I'm going to take this trade here, I'm going to take this long here and watch it shoot through the order block. Well, we shouldn't be gambling on risks. Just because it might do that doesn't mean that it will do that, especially at the 50% mark. What I'm expecting Bitcoin to do is eventually, even if it takes a couple more hits from this order block, I am expecting it to bounce back up. I'm expecting it to come up and test these ranges up here. Why? Because 90% of Bitcoin's time is spent in ranges, ranging from the top of a range to the bottom of a range. And all we have to do as traders is catch the wave. Now, we like to do in Onyx Smart Money concept training, we like to do large trades at the high time frame level. And once we've got that, once we know that we have a trade here at the high time frame level, maybe it's a long from the bottom or a short from the top, then we can make smaller trades going from the bottom to the top. We don't want to be doing trades around this middle mark. We do not want that. Don't fall into that trap. It's a bad idea. So now that we know that price is likely to eventually break through here, we know that price may come back down. It may come back down to this bottom range. And if it comes back down to this bottom range, we can see here, there is a point here where we're getting wicks. Yeah, you might be wondering why. Where are these wicks coming from? To find that, we're going to have to scroll to the left. And please stop me if any of this is not making sense. If you're wondering what the fuck is he talking about, let me know. Let me know. What happens is over here, in our previous price structures, we've got structure formed. These structures absolutely create boundaries where the price will come up and down. We can see here there is an 8-hour order block right here. Now, you might say when you're looking at order blocks that you take the last down candle before a strong up move. It's not always that simple. And it's not an exact science. This is an art. So for me, I'm taking the entire range of this 8-hour down range here, and then a big upswing. Why am I taking that? Because look, we had price come up, and it was a big move up. That was huge. And then price came back down into this supply zone right here, because this is now supply zone. When price moves up, it's supply. It means there's a lot of people down here who want to buy at this level. Oh, sorry, that's not supply, is it? That's demand. There's a lot of people down here who want to buy at this level. And after this huge big up move up, price came back down and allowed people to buy at this level. Because people wanted to buy at this level so much, the price quickly bounced back up. Hopefully all of their orders got filled. What does this mean for us? Well, if we move this across, all the way across, well, we can see not only have we busted into that demand level there, we've gone through it. So that's not even the right demand level that we're looking for. We need to go lower. Let's take this lower. We have another demand level right here. And we can see from this demand level, price rallied up. We had a base, we had a drop, we had a rally, and then we had a big base here, and we had a rally. Meaning we have another demand level here. Does this line up with what we're seeing? Yeah, it does. So, in order for price to break through this and make a new price structure, it's going to have to break through this supply zone. Sorry, this demand zone right here. This is an 8-hour demand zone. It's strong. It's got a lot of potential in there. A lot of people are going to be wanting to get their price, to buy their price right here. A lot, for sure. So now we know where price will need to break through before it actually dumps further. What we will see from experience is it's going to come down, it's going to test this a few times, it's going to test deep into here. And we're going to bounce off this a few times, no doubt. We bounced off it once. That's a good start. Could I have gotten, like when this price structure first happened, I'm a little bit annoyed. I was streaming at the time. I saw price come down here and form this level here. I saw it come back down to here. I could have taken it there, but I was distracted by some other things. That's fine. It happens. So now we have this supply zone. This demand zone down here. We have a demand zone. What does this mean? Well, now we can look for order blocks at this lower level, since we know we have a demand zone down here. We can look for order blocks on this level, around this level, that are going to help us get a trade that can go from the bottom to the top, from the discounted prices to the next OB up. That's what we're looking for. Now you might think, Chris, price has already come up from there, it's not coming back. But trust me, it'll come back. It always does. And we have to be patient. If we're not patient, we're going to make irrational choices. So this is now drilling down to the 4-hour chart. I like to start at the high level and drill my way down. So at the 4-hour chart, we can see we have a lovely 4-hour OB. Now I'm taking this particular candle, the second candle here, because this first candle, which was the first bearish candle before an upswing, this is what we call a doji candle. Decision candle is what other traders won't call it. And means we had a relative number of people be bullish and a relative number of people be bearish, leaving the candle in the middle. When that happens, I take the next most grown, most fully matured candle. And in this case, it's almost the entire range here. That would be my bullish OB that I would be targeting. Doesn't mean I need to put a trade in here, but you could. This would be a good trade. A long here. So what are my rules? What are my rules? Not Google Help. I need to fix that for sure. Whoops, back to BTC. I've set this rule number 1 for F1. So I need to fix that. Rule numero uno. Shorts at premium prices, longs at discounted prices. If I do a trade here, do I get short at a premium price or a long at a discounted price? Yes, I do. Yes, I do. This is a long at a discounted price. It's the bottom of the range. This is the exact kind of trade that we'd be looking for. All right, and that's just a rough idea of what the trade might look like. Go away, Google Help. Rule number 2. Never trade at 50% of the range. Are we at 50% of the range? No, we are not. We are down the bottom of the range. All right, so we satisfy rule number 2. Rule number 3. Target the next OB, and the return to risk reward ratio must be 3 or higher. So the next OB that I should be targeting. Now, this is a rule. This is a good rule. At a higher level, you can afford to target higher OBs. If we were to target this particular first OB, well, we're only going to get a 2 risk to reward ratio. It's no good. It's not what we're looking for. And price is nearly almost guaranteed that it's going to at least target this. But that's not the risk to reward ratio that we're looking for. You can change your risk to reward ratio. Oops, let's just make sure. It's 2.22, so not quite there. But you can change your risk to reward ratio. That's a tongue twister. You can change your risk to reward ratio by moving your stop loss. See how that changes it? Now, rule number 4. Whoops. I won't do that. Rule number 4. Set my stop loss to 25% of my OB. Okay. Well, let's do that. Let's have a look. My OB on this 4-hour chart is here. And 25% is this right here. 25%. So I can afford to bring my stop loss back to 25%. And we've got a 2.98. Third thing that we can do if we want to increase our risk to reward ratio is lower. In a long, we can lower where we want to come in from. So we can lower our buy-in. Lowering is going to mean you have less chance of getting in. Potentially. But that's not a bad thing. It's not a bad thing. Now, you can see in this particular trade here, price came back down and went right through where our stop loss would be. So what you might want to do is wait for the price to enter this area. Our idea is to have a trade on right here, but wait for the price to come back down into this area here. Wait to see the price come down and then stabilize in here. And we'll be looking for a point. We'll be looking for a point where the price jumps up from here with a small jump for us to go in for the long. That's what we're waiting for. So price, and I'll show you what that might look like in a thing. So price comes down into our zone, breaks through our zone, steps into this one here. Price comes back into our zone, ranges for a bit. Price pushes up. It will return to origin. Price will go higher. That's generally what we see happening, and that's the kind of thing that we're looking for. So while I might have this here, and this is a very good trade to make, you might want to wait for price of this. Now price might do something else. That is just one thing price could do. Price could also come down to here, just enter the tip of your trade, and then boom. That can happen. Oops. That can happen. That can absolutely happen. Happened many times before. When you get your TA right, that is exactly what can happen. So it's up to you now whether or not you want to wait for price to tell you that it's going to actually go through your stop loss, or perhaps you want to do a bigger trade, and this is also a valid option. You could do a long from here with the stop loss down in here. It just means you're going to have to make your target a lot higher. You could do this, targeting the OB left behind from this drop for a 3-to-1. And this is a bit of a smarter trade because your stop loss is much wider. It means it's going to make sure that these long scam wicks down here, these stop hunts, aren't going to break your stop loss. So what I would be doing personally is putting a trade like this into the system. This is the trade that I would try and make once price came into my area of interest. This is the trade that I would have in my Bybit account ready to go. You can have two Bybit accounts. You can have your normal account and a sub account. So you can have a long, and in your sub account you can have an even more highly tuned long. And it's a great thing to do. It's a great thing to do. We can drill down further now into the hour long, and we can take a really big look. So I think both those trades are pretty good. This one especially. What I love about this trade here, once you're comfortable that price maybe has dipped through your come down here and dipped into this big demand zone down here and come back up, one of the things you could be doing is setting this as your target 1, this area here, and setting this as your target 2. Or you take half profits here at a risk to reward ratio of 3. You take your half profits, and then you set your target to be top of the range. That's a huge risk to reward. You have to be patient. It's going to take some time for the price to jump up there. But that creates a 13 risk to reward ratio. That's a huge move, and it's entirely possible. You could do the same over here with your even safer bet. That gives you an 8.7 risk to reward. So if you got these two options, which one would you be taking? I can tell which one I'd be taking. The one that leaves me with the least chance of hitting my stop loss. I'd be taking this one. That's the one I'm most interested in. Hope that helps. Hope that helps. Let me know if it doesn't. All right, what's next? I'll get rid of this. I'm actually going to get rid of this one. This is the trade that I'll be taking. I'm going to pop this over here. What I'm going to do is delete my trades that didn't go through, and we're going to pop this one in. Make sure I don't lose my losses. They're important. Okay. It's 24th of the 11th, 2022. Time here is 11:48 a.m. Let me know if you've got any other questions too. That's great. Yeah, well, watch what we do when we make the trade. BTC USTT. And that shows you how we do longs. When the market is ready, I'll show you how we do shorts. I was looking for shorts yesterday. You can see I had a BNB short on. I took it off. I took that trade off because, and I took it at a partial loss, which is way better than taking it at a full loss. Whoops. That was 12. A loss of 12, and then there was a loss of 23. Taking a partial loss is way better than a full loss any day, if you ask me. But I took the trade off when I saw that Bitcoin, and I'll go through this in a minute too, because it was pretty important. All right, Bitcoin long. My stop loss risk ratio on this one is a 1.75. If you're wondering what that is, I'll show you. On your, what you would call this, on your long, let's pop this down to here so that there we go, that's better. On your long order, you see down the bottom here, there's a number here, 1.75%. That's your risk percentage. My spreadsheet takes that, and then I tell it, I only want to risk 5% of my capital. And it will tell me exactly how much my order should be. It'll tell me exactly how much I should be allowed to risk. So now when I make my order, I know that my orders will cost $48 in this one. And we'll make the order in a minute. Just need to grab my entry price. The profit level. And my stop. Oops, not my Discord. My stop. Okay. Now we can head over to Bybit. And I'm actually going to cancel all of these orders that I have because I don't need them. We'll add this new order in. And the cost of this one was $48. This is how we do a risk-defined entry. Take profit. Well, that doesn't look right because I'm on XRP. Okay. Let's try that again on Bitcoin. Entry price. Order by cost. I'm buying a long. Take profit right here. Oops, bugger off. Take profit is going to land me $63. My stop should be giving me a $21. Yes, so we're good to go. Now we can open a long. Is this the only trade we can make? Well, when the price comes down here, it gets us in to a very nice trade. Once this trade gets triggered, I will be setting this top take profit zone. Where is it? This profit zone here, that will be changed. I'm going to remove that as soon as this gets triggered. And I'm going to change that and add into Bybit. I'll show you exactly what we do. I don't know if I can actually because I don't have a trade on right now. A button will come up here where you can add a close buy. You can click close buy, you can click limit order, and you can set it to close 50% of your trade at that limit, at that entry, that take profit limit. And then we can change our take profit on the trade to be all the way above here, so that we can have 50% take profit here at our original target at a 3-to-1 RR, and we can push it all the way up to the 8, 9, 10 RR, and that is a killer trade. And there's a reasonably good likelihood that, for one, the price is going to come down because the price will retrace. The price might go up first, but the price will retrace, and we'll be watching for it when it does. And if the price does go up first, that's fine, because up here, these are premium prices. We'll be looking for shorts, and we'll be looking to find a short to take us all the way back down. Now, when the price does come back down, this is a pretty wide trade. This is big. This is targeting with a stop loss to make sure that we don't get tapped out. We don't want to get tapped out. And if we do get tapped out, at this point here, it means that price has broken through, and that's not a trade I want to be in. If price has broken through here, it could mean a new structure, and we'd like to see where the price goes. So remember that rule that I have? Rule number 4. Rule number 4. Stop loss 25%, and really it's stop loss at least 25% of my OB, set to where my bias will be wrong. If the price comes down through here, my bias will have been wrong. I don't want to be in a trade when my bias is wrong. I do not. That's how this works. Okay, so that's my plan for Bitcoin. And adding that second layer on, price comes back down into this zone here. This big trade goes on. I'll be opening up in Bybit my sub account so that I can create smaller longs. You can only have one long on at a time in Bybit. Well, in nearly any trade platform that I know, you can only have one long on at a time for one coin. You can't add on new longs. If you do, it takes your capital, pushes it all into the same long, and I'm pretty sure it takes an average of your stop loss, and that's pretty crap. So once your long is in, you either take it off the market and put a different long on, or you leave it. The solution is to create a sub account. And the options are there. I think I can show the options. In Bybit, if I can remember where to go. Sub account. Create yourself a sub account from Bybit. That way you can have much better trades at the same time. All right, so my problem would be BNB. This is where I think crypto trading gets really interesting, because the structure of BNB was very, very, very different to the structure of Bitcoin. And it's interesting. You need to be very careful about your strategy here. We can see here in BNB, if we take a fib from this whole entire structure, from the top of this structure to the bottom, fib, give me a fib. From the top of this structure all the way to the bottom, we are currently at the 50% zone. The danger zone. I think I need some text for the danger zone. Yeah, I think I do. I'm going to try and find a nice animation for danger zone. We'll get rid of that fib. We're at the 50% zone, which we don't trade in. Remember, that's rule number 2. Rule number 2. We don't trade in the 50% zone. Okay. What was interesting though was at this point here where I was taking shouldn't have been doing anything here. I was interested in taking a short on BNB. From my perspective, I was looking at the BNB chart too close to home. I was looking at it from here. And looking at the chart from here, we can see down here is discounted prices, and up here are premium prices. But I should have zoomed out to see that the structure formed up here. We're actually at 50%. That was my mistake. And if we look at the structure difference between BNB and Bitcoin, it's vastly different. Even though we're at the 50% range on both, the structure looks very, very different. Before we'd make any altcoin trades, we should be looking at Bitcoin and we should be looking at ETH, because these are the two market leaders in order, Bitcoin and ETH. And if we see that the coin that we're interested in taking a trade on goes against the grain of Bitcoin and ETH, we should not be making that trade. That should be rule number 5, but I'm not going to put that as a rule. That's just some advice. And I saw this opportunity for a short. I should have been waiting for an opportunity up here. I should have been more patient. Patience is probably the biggest thing that we need when we're doing smart money concept trading. We're only trading when we have an edge, and we only have an edge when we have patience. Right? So for BNB, not touching it. I'm not touching it till we see prices come up to here. I'd love for prices to come up to this level here. We've already had a nice big wick come up and mitigate some of the stops up here. And when I say stops, that's what these money markers here are. These are places where we know that retail traders have put their stops. And we know they did that up here because when price came down, Retail traders put their stops right here. Right there. Maybe not even just retail traders, just traders in general. So we know price was going to come back up here eventually. If I had have been looking at this chart, which I wasn't looking at BNB, I would have definitely had a short ready to go right here. That would have triggered, and that would have been a phenomenal trade. From the top all the way to the bottom. I saw one of the traders on Onyx did that. It looked beautiful. Those are the types of trades that we're waiting for. You'll make more money in those trades than you'll make on quick little scalps where you can easily hit your stop loss. Okay. Looking at ETH. What we're going to do now is just clean this chart up. Let's do this again. Lucky I like doing charts, eh? Because that's what we do on this show. Alright, now if you're seeing my charts and you're wondering why the hell I have these yellow lines here. Because retail traders use lines. We don't use trend lines for smart money concept. Why am I doing a trend line here? The answer to that is simple. It's not even a good trend line. It was just a rough trend line too. I'm not trading on trend line, guys. Do not be mistaken. We are definitely not trading on trend lines. But trend lines show us that, okay, so price comes up, no big deal. Price comes down. Price comes up again and stops right here. Retail traders see that and they draw a line and they go, oh, that's interesting. Price comes back up again and price goes to the trend line. They go, oh, that's really great. I'm going to put a short on right there. Doesn't matter where it is on the chart. They don't think about premium prices or discounted prices. Most of them. The smart ones do. They put their shorts there. Price comes back down. Price sits. Price hits the line again. They put their shorts here. Price comes back down. Price has hit that line again. And they've put shorts here as well. How do we know this? Because if they hadn't have put their shorts there, the price would not have moved in the way that it did. Remember, their shorts are the things that move the price. Their stop losses are orders in the order book, waiting to get hit, waiting to get taken. And while we may look at this and think, yep, they were right, the price did come over this trend line and it did move like that, that's fine. Some of the time, they're going to make a bit of money. If they didn't, they wouldn't be in the market. But what happens here is these stop losses build up. These orders in the order book build up at this point. And when an institution or anyone who would consider themselves smart money, so a market maker, institutional traders, fund traders, people with big pockets, people with big accounts, when they want to make a move in the market, they are looking at a high time frame. They're not looking for trend lines. They're looking at a high time frame, and they're looking to get a good discount on their price. And they're going to be looking at where in the order book they can actually make some orders, buy some liquidity. And when I say liquidity, I mean buy some USTD with some Bitcoin or buy some Bitcoin with some USTD. They're looking to get a good deal for themselves, but they're looking for where there are orders in the order book. Because when there's orders in the order book, they're not going to move the price too much. They will eat all of those stops when they're ready, and that will leave retailers thinking, well, shit, I lost that trade. What we're trying to do with smart money concepts is we are trying to predict when that happens. And we're trying to follow that wave. We don't have the money in our accounts to create those waves. We're trying to follow them. That's what we're doing. So let's look at this particular chart. Now, the 4-hour chart. We can see here, even since, that's why I love ETH right now. This is back in July. ETH has had this awesome range, and it hasn't really faltered. Let's take a look at our range. From here to here is the range. I need to get rid of everything else just so I can see what I'm trying to do here. So bear with me, guys. I'm going to get rid of my markings. The 50% mark of this range is right here. Now that is the monthly. That is a monthly range. Where are we right now? We're all the way here in November. November starting here. So while at the big picture, we may be in discounted prices, from the range that we are currently in since November 14, which we've been in for 10 days, we've had a massive, massive move down. And the range is smaller. This was November the 9th. This was 3 weeks ago. So the range that we're currently in, even though we're at discounted prices in the bigger picture, the range that we're currently in, this is the 50% line right now. And we are right at that 50% line. So there is no way we are trading at this current price. No way. Does that make sense? That would be risky. So we are not looking for a trade here. And in fact, unfortunately, this whole entire last week, from the 16th until the 20th, we've been stuck in this crappy little range where not much was happening, and all of a sudden the prices dropped. Prices dropped. Not even to the discounted prices. So it held up. It did quite well. Let's go over here first, and let's have a look from an 8-hour perspective. Where is this demand zone? We can see there's a pretty solid 8-hour demand right there. Wait. Oh, that's my alert. Don't worry about that. And yes, it got hit. Does this correlate anywhere to the left? Let's check where it correlates to the left. See if we can make sure we get this right. We had a big push up from this point here. So we do have a big zone right here from the bottom there. Let me just make sure we get this right. To the top there. It's a doji candle, so we're going to take all of it. Massive zone here. Got mitigated. And there was a lot of support from here. So there were a lot of people who wanted to buy it at this price. There was a demand zone put here. This is an 8-hour demand. A lot of people wanted in. The price only just broke this on its way down in June. It's hit back here a couple of times. We've been tapping into it a few times here. So that is a huge area of interest for us. We've had even highs. Sorry, these are not even highs. We've had even lows pop in to our left here. And again, we've had even lows to our left here. Leaving smart, no, not leaving smart money. Leaving stops. Leaving stops. Right here, ready to get taken. But they haven't been taken yet. They weren't taken before. They weren't taken after. Because people are really wanting to get in on this price down here. This is a nice discounted price. So we'll be looking to make a long in this area of the map. And in this new structure that we have right now, that we've been in for the last week, we want to be looking for some entries right here. these would be our entry level ones. At the 8 hour chart, we have an 8 hour OB right here. This would be where we want to find our entry. This is a good entry. This is fantastic. Doing a long. Let's just check my 50% mark of this OB. Alright. The long position at the 50% mark, right there. Again, we're only using these fibs just to get our percentages. As our rule is 50%, 20% of the stop loss. So this seems pretty safe to me under these swing lows. And we can get a nice 3.14 return on our risk to reward ratio. That seems pretty good to me. I want to get rid of this alert. I don't need that. Stop. Okay. Now again, this could be my take profit 1. My take profit 2 is going to be all the way up here. Will we see a price hit the top of the range? Yeah, I think we will. I think we will. What if this is the top of the range? Well, that's where I was that where I was measuring from? Yeah. So if this was at the top of the range, still a 6.5 risk to reward ratio, which is pretty good. Now from here, we have our bias. We want price to come down here and meet that OB. We can take trades from this level here up. We shouldn't be taking trades around this 50% mark. We should not. Don't do what I did. Don't fall for the trap. Or Nick will come in and kick my ass and your ass. That's what we pay him to do. Let's have a look at the lower level charts. Let's see if we can refine this entry any further. On the 4 hour OB, we can see we can make this smaller. We can come down to here. Oh, we could even come down to there. I'm just going to hide this element here. Just for the moment. It's still there. I haven't deleted it. I'm just hiding it. I'm going to reduce my entry point to 50% of this OB. And increase my stop loss because I can have a bit more room to breathe there. Now we're targeting a 4 hour OB inside of an 8 hour OB. Getting a much better entry point. If we go down to the 1 hour chart, what I like about this particular trade is the 1 hour chart doesn't look that different. Could we be doing the same thing at this higher OB here? Yes, we could be taking a trade at this higher OB here. But with every trade closer to the 50% region mark, we're adding risk. I'd rather wait for the price to give me a proper discount where I know that we're going to come back to this price and we're going to test higher prices. I don't want to do a trade right here where we don't know if the price will actually test higher prices first. I'd rather wait for this confirmation down here. It's all about timing, isn't it? It's all about timing. What is the point of taking a trade when it comes down to nearly where we wanted it to be, but not quite where we want it to be, and seeing it come through our stop loss and hit the point where we should have taken it? I have taken far too many trades in my short trading career so far where that has happened, and I'm not doing that anymore. All right? I'm not here to take unnecessary risk because doing what we do is risky enough. We've only got a slight edge. So we need to follow our rules. I'm going to wait for price to come back down and then I'm going to take it. Now, if price doesn't come back down, it might not. Looking at this chart here, I'm thinking price is going to come all the way back up here and then come down. So where will price go to? Let's take a look at that. Let's take a look at the 4-hour ETH chart. And we have a wonderful OB. Marvelous. A 4-hour OB right here. And you can just see. Actually, I'm not even going to target that one. The new OB that has an unmitigated. Oh, that's huge. We don't. Oh no, it's right here. Sorry, my bad. Wait a minute. What am I looking at here? Is that? Yeah, sorry, my eyes are playing tricks on me. It's a huge, big supply zone right there. Huge supply zone. Because this old supply zone right here has been mitigated. Let's see if we can drill this supply zone down even further and find a smaller supply zone within that we can target. So going down to the 1-hour chart. And yeah, there is definitely a 1-hour supply zone that we can look at. Right here. Look at that. Oops, I'll leave that there. It's just, that is in the wrong angle. I need the corner of my box here. Alright, right there. Got a 1-hour supply zone right there. That line, I need to get rid of this. This trend line here, it's annoying me. It's making my box look not straight. Oh, it was killing my eyes. Okay. Now, we've also got, and you know what? Let's take an even deeper look at this. Where did that supply come from? Because we've got this supply zone right here. Price came down and bounced back up. It based here and then dropped, leaving a supply zone here. That's the supply zone that the prices come back up into here and back down again. That's the one. This is the parent. It's important to find that parent because what do we know about supply zones? Well, liquidity gets taken from the supply zones and it gets weaker over time. Retailers will tell us that support gets greater over time. We know that's just not true. Liquidity is not support. Liquidity is liquidity. And when it's gone, it's gone. So what we'll be looking for to take a short is for price to come back up into here. And there's three things that could happen. All right, these are the things we need to consider. When price comes back up through here, has there been a higher high, or did it just enter in and dip? All right. So did it break this high over here? If it breaks this high over here, we could be going bullish, which would be great news for ETH, but it's not a trade we want to make unless we're already in a long from under here. So that's the thing to consider. When price does come up, does it make a higher high? And it will have made a higher high. So price will have come up, broken through here, and made a new higher high. The question will be then, when it does retrace, will it create another higher high? That's what we're looking for. And we'll be looking for that not on the 1-hour chart, we're looking for that on like the 4-hour chart. Because higher time frames give a better indication of exactly where we're going to be going. So far we've had higher high, lower high, even low, lower high, lower low. And depending on what happens here, if this is a lower high, then things are not looking great for this ETH chart. But I'm hoping that it comes up over here and we form a higher high. That would be lovely. And we've got the stops there. The stops are waiting to get taken. We're just waiting for a retail trader to come in and take all this. That's what we're waiting on. Now, do you guys have any more questions? Oh, it looks like I got someone in my Restream chat spamming away. Yuck. Let me clean that up. You are blocked on YouTube. And you're blocked on Restream. Goodbye. Sorry about that, guys. That was pretty awful. But it's fixed. Your precious eyes are saved. You guys have any questions? One question I have for myself is where to next? What will I be looking for? I might take a look at XRP. I'm certainly not taking any trades at the moment for this, but I am looking for my next point of interest. Now, if price for ETH, and I do love these ETH charts at the moment, has come up this far and fails, if we get a swing fail here, could we take a long? Well, that's a good question. If it does fail here, and we still want to try a long, could we take a long at the 60 to 70% retracement mark? Let me just do this one, redo this one, just to make sure I got that right. Whoops. From the bottom, all the way to the top of where we are now, 60 to 70% retracement mark. Will we have a breaker block in there? It could. I wouldn't even do that. I wouldn't do that. I wouldn't be taking anything at this level here because you may as well just take it at the bottom. So the only trade I'm interested in on ETH right now is trading from the bottom. Once I'm in that trade, I may look at smaller trades coming up. I may, if I get this trade activated, I may look at this area here for a secondary long, and I may look at this area here for a secondary long. I won't be looking at those areas if price has just come back down into them. Price is likely to retrace. It always is likely to retrace. But even if it does, I'm looking for this point here. Now, what if you want to guarantee your entry? Could you guarantee your entry? Well, let's have a look at that. If price does come down to this 70 to 80% mark, I can guarantee an entry by pushing my entry price up to the top of the range there. I could even, let's just do a measurement here of the order block. We could save some money here. And make that stop loss a bit smaller. We could do that. You're adding to your risk, but you're making it more likely that you get the trade in. That's a 3.75. You could do that if you wanted to. I'm not interested in that though. I'm greedy. I'm very greedy. But I do like the smaller stop because that's a 6 return on risk. A 6 risk to reward. That's the trade I am waiting for. That's what I want to put into my book. That's the one. Alright, so for 20, date is the 24th, still the 24th of the 11th. No, the time is now 12.24. This is ETH. 25 leverage. Long. All right, my stop loss percentage is 1.82. My order cost, well, my risk will be 5. Let's find my order cost. $46. And the risk will be $21. Let's grab these entries. Entry price. Take profit level 1. This is take profit 1. Stop level. All right, let's get this in the system. Back onto Bybit. Derivatives. Move this over to ETH. Order price. Take profit. What was the order cost? Sorry. Order cost is $46 by a long. Okay, base levels are in. Now looking at this retracement idea again. If price does retrace, these are the levels that we wanted in. Where could we go if we just wanted to catch the long on the retracement? This would be a good area here to catch that retracement between the 60% and 70%. That's not bad. We could definitely do a long right here. We see price moved up from here, and we do have an imbalance here. Let's see if we can actually get a return on this that we want. Yeah, that's a 4.16 risk to reward. That is definitely a trade you can make. I like that one. So if price does come back down the bottom, bam, we're going to get it. But I have a feeling because we've had some base here, so we've had drop, base, drop, and then it's come back up on here, giving us another base. Fairly sure if price does test this mark again, I'm fairly sure it's going to come in through this order block here and move up. And the reason why I think it might do that is because it's at that lovely 60 to 70% retracement. And I love that. I would prefer to get an 80% retracement, but we're more likely to get a 60 to 70% retracement. So that is a cool trade. I'm going to pop that one into. Once these are in, the hard part starts. The waiting game. 12.28. This is for ETH. And that reminds me, while we're there, let's go have a quick look at the Bitcoin and see if there is another opportunity at that retracement level for Bitcoin. All right, so this was a stop loss percent ratio of 1.64. All right, what was my cost? Well, it will tell you. It will tell me my cost. So hold on. Put my risk in. Cost is $51 for this one. Okay. Now let me grab my entry price. Profit level. Stop level. And I'm hoping that we have an entry here that we can go and review later on. If this does enter in, then tonight I'll do a catch-up stream to have a look at what happened. All right, buy bet. Let's do this. Order price is for the ETH chart, $51. We're doing a long. Take profit will be here. And stop will be here. Just double check. It's not quite right. Was it 51? It did say 51, but it's not quite right. Math is hard. 52 gives you the 21 risk. Profit of $93 on this one if it does go through. We're going to do that long. All right, Bitcoin. Let's just double check to see. Bitcoin has a similar thing going on. It doesn't have two steps in there like ETH has. It's got one step and then one step to the 50. Let's double check this retracement from here all the way to where we are now. It doesn't have a nice clean point there like we had on ETH to take that 60% retracement. It has this level here at 50, but that's not enough for me. That's not enough of a retracement for me to get interested. So for me, for Bitcoin, yeah, I don't think I can take that trade, and I'm not going to. It could retrace, definitely could retrace, and it could bounce from here. It could come down to here and it could bounce, but it's just not enough discount for me to get excited. I want it down here, and there's no price structure on Bitcoin to support that idea. So, not going to do that. I'll do it on ETH. And isn't that interesting how, even though the charts look so similar, an opportunity can arise on one that doesn't appear on the other. Now we'll delete this particular one here for now, because that's not of interest to me right now. If the price has moved up and the retracement level of 70% comes back to here, I might be interested. But for now, that's not an area that I'm looking at. I'm going to wait for this trade to get triggered. Now, is there any other coins you guys want me to look at? Because I'm going to look at XRP next, because there were some interesting points on XRP from yesterday. If you want me to look at any other coins, now is your time to let me know. And we can do the charts together. If there's any coins that you've already charted that you think you just like to correlate with mine, just to see if we're on the same page. We can have different ideas. Doesn't mean you're wrong. Doesn't mean I'm wrong. They're just different ideas, different trading styles. And you're watching me with my trading style, and my trading style is evolving. I mean, it's funny. I thought I had it in the bag, and then I started streaming, and I realized not quite in the bag that I thought it was, because emotions come in. Trading online on a stream is, you've got a lot going on. You've got the stream going on. You're thinking of that. You're thinking of functionality on your PC. So there's a bit of pressure there. And there's a bit of pressure, not just to get it right, but also to get a decent trade in, because trades are exciting and you want your stream to be exciting. And that actually for me was a really great catalyst to remember not to fuck up, to remember my rules. Your OBs have improved just from watching my streams. Oh, thanks, mate. Yeah, OBs. I mean, I am the auto block assassin. I called myself that when I started really enjoying the trade, and it was fantastic. And then I realized Maybe the mistake in making my name the Order Block Assassin, because order blocks are everywhere. And what is really important though is the order blocks that you don't pick. So you see here in ETH especially right now, we have this order block here. Price has rallied, had a base, a small rally, had a drop, base, and then a big rally up. And this big rally up has broken structure right here. And this looks like a really good order block. Structure's broken. You could definitely put a trade on that order block, is what I would be thinking. And for many, many months of my trading career, I absolutely would have chosen that order block. But it's not about the order blocks, because order blocks are everywhere. Once you've trained your eyes to see them, you're not seeing the important thing, which is stops. It's the liquidity. Where is the liquidity? That's what we need to be looking at. Not just the order blocks, but where is the liquidity? Where do we want price to retrace to? And if we just look at liquidity alone, we can draw a trend line here. What do you think's happening right now on the ETH chart? Where do you think the money is right now? Because that is a clear trend line to me. And I know there's retail traders out there right now. I know they've done their basic chart training. I know they know all the bear flags and the death crosses and the death spirals and the dead bunny bounces, or whatever they want to call their things. They've got indicators on their charts. They've got candle formations that they're looking at. Oh, and me and some of my other buddies who were training with me at the same time, we've been through all this. We were those traders. We were the ones looking at all of the indicators. We had 15 different indicators on telling us when to trade. Stressful looking at indicators. You may think it's easy, but they don't indicate anything. They indicate candles. Like, candles are meaningless. What matters is what the big boys are doing. So the retailers are seeing this trend line form. Is there a channel here forming? There could be a channel here forming. There is a channel here forming. And it's getting smaller. Retailers tend to think that the channel is going to come up like this and form at a peak here, and then something's going to happen, a big drop or a big push-up. When this is happening, we've seen price come up. That's cool. Just let me turn my sound off. One of my students. I'm an e-commerce teacher. I teach people. While I'm learning how to trade, I'm teaching people how to make money with e-commerce. And my student keeps messaging me. So okay. As prices come up on this trend line, it's formed in this range here, come up and hit this trend line again. And I guarantee you right now, retail traders have seen that and they've put their stops there. But more than that, they've been following it. And when it hits this trend line again, they're going to put more stops there. We are just waiting here patiently for... Oops, rule 2's come in. Turn rule 2 off. We're not up to rule 2. There we go. I'm going to change those up so that's a bit easier for me to hit my rules. Those stops are here. So retail has been putting all of their stops down here. Some hungry whale is going to come in and want to take a position. And we are in a prime opportunity for them to take shorts, push this price down, and have the price bounce off. So that's what we're waiting for here. The only people that can really move the chart with big movements are the smart money investors. And while we did have a big opportunity, a big time here where we didn't have a lot of smart money doing much of anything, that was when the FTX crash happened. That was when Crypto.com were rumored to be having liquidity problems. That was when a few of the other funds and exchanges that were impacted by FTX were also saying we're in trouble. And I read that a lot of liquidity was taken off the big platforms and put into wallets. And all of a sudden, prices moved. So smart money's come in and they've made some movements. They're building a new structure. And look, the new structure they've made, it's still at the bottom of this bigger long-term structure. So right now, we are looking for longs, waiting for this retracement to come through, pick up these stops, and take that to a higher level. If this trade that I put in here, if this fails, which it could, a trade is always a risk. If it fails, I'm still going to take this long at the bottom here. Okay? Still going to take that. But at a 4.4 risk to reward on this 60% retracement, I've taken my fib from the bottom to the top, 60% retracement. That's lovely. Between 60 and 70% is fantastic. That's my ideal retracement. And we are bang on 60%. I love between 60 and 70. 70 preferably. But that 60 was where we take it. 60 is that the cutoff point where we're looking for a good discount. Why? Because it just tends to hit there more. All right, let's move over to XRP. Because I saw some opportunities on this XRP chart yesterday. We have been trading. This line here is the. You know what? I'll show you guys how we come up with this because that's pretty important. All right, look at this range. Take a fib from the top to the bottom of the range. The 50% mark is right here. So let's draw a line through the 50% of the chart. That's the area where we do not want to trade. That line's too big. Let's just make it a bit smaller. It's not straight. It's good enough though. That's my warning. My warning line. Do not trade. What rule was that? Rule number 2. Do you like my new rules, by the way? I think it's pretty cool. Rule number 2. I want to get some sound effects. I'll try and get some echo going in, so I can say rule number 2, 2, 2, 2, 2. That'd be pretty cool, yeah. All right, I'll get that set up for next stream. Rule number 2. We never trade at 50% of the range. Rule number 2. Never trade at 50%. Okay, these are my rules, by the way. So you don't need to necessarily say these rules in this order for you. Every trader should have their own rules. That's my rule. It's straight from the Onyx platform, straight from the training, straight from Nick. It's just, that's the order of my rules. I've made these up. You should make your own up. And if you can do what I'm doing, sit here, talk to yourself. Talk your way through these charts like you're training somebody else. It's good therapy. It's good for getting your basics, which we should be doing every day. You know when you have like a tennis player, they don't sit there practicing the hardest shots all day, do they? They practice the basics. You got to get the basics right. Same with any sport. Same with trading. We do the basics. All right, get rid of these. Start again. Because you don't know what I was thinking. Hell, I don't even know what I was thinking when I made these. I made these days ago. Who even knows if they were correct back then? Oh, they probably were. But we'll do it again. XRP. Draw lines from the middle. All right. We can see prices up here at premium. Prices down here at discount. Where are prices stopping? We have a line here. Unfortunately for XRP, we don't have the data to show us back in time if there is any sort of demand to get your prices down here. This is the daily chart, so one might assume if we can find an OB down here, you could assume that there is a demand level right here. So let's find the best OB. We're looking for the OB at the bottom that had a big push up. So we had a break-in structure right here. Structure broke up on that side. And we've got a fairly... Now, when you're looking at OBs, the rules of finding your OB says the last down candle before an upward swing. And I think for Forex, that works really well. I think Forex, in general, is a lot less volatile than we have on crypto. So I like to be a little bit more lenient with my OBs. We have a massive big daily demand zone right there. People are happy to buy at that price. Back in July, that was the bottom. And we can see here, price has come back down and has dipped into here a few times. The last time it dipped into here was here with a big push up with a fresh OB just on top, big push up. And that fresh OB, let's go down to the 4 hour and take a close look at that OB. The OB that kickstarted that big push up was right here. It was an OB from a previous OB. Right here. Look at that. A big push up from there. Return to origin. Boom. That is Onyx 101. Perfect playstyle. Now we've come over here. And that has done exactly kind of what you expected it to do. So we've launched from over here into this OB within a big daily demand zone. We've touched it. Now, unfortunately, knowing myself, knowing the discounts that I would go after, I probably wouldn't have got this particular trade. Would have been very disappointed. Price, if I was doing a long, I would be targeting, let's go further down. Let's do the 1 hour. I haven't done any back testing. I'll probably do back testing later on in the week. Maybe tomorrow. Okay. So that was a 4 hour OB. Looking at the 1 hour OB, it didn't even hit that. It didn't even go close to the 1 hour OB. The 1 hour OB is right here. Now, because there is a long tail down, I don't see any reason why you can't make your OB go all the way down to that. I mean, it's safer. The 1 hour OB here is there. Let's label this. 1 hour OB. Four-hour OB. You can see here, price dipped into this 4 hour OB and it's zoomed off there. But this 1 hour OB, it had to break through. Had to break through a lot of this resistance. There was a high level of demand from here that's had to break through. So you could assume. Okay, assume's not a good word to use because it makes an ass out of you and an ass out of me. But you could fathom the idea that eventually the price is going to come and try and break through these order blocks right here. One second, let me check my restream here. What is it saying there? chat is ready to deploy. Thank you. The chat is ready to deploy. Bloody hell. Of course it is. All right. So you can assume the price when it does come back down here, it may run out of liquidity. Now, it may not this time because we have had... Well, I thought we were going to have even highs, but we had even lows come in. So I don't like that liquidity right there. If I was doing this trade, I mean, we're not quite at the bottom of the structure at this point, but still there is a high level of resistance through these OBs. There is a chance that when it does come back down here, that it's not going to sustain it. It could go all the way through. If it does go all the way through, where are we going to be looking at? Bloody hell. Looking for the lowest OB to break through. And that... Okay, and we're in this structure here. Price came down. We got a base, drop, rally. Broken that structure there. This is the lowest OB. Hey, now stay where you are. I just want to expand you out. There you go. Alright, that's the lowest OB right there. The lowest 1 hour OB within the 8 hour demand. So what could we see happening? Well, because of the structure of this, because XRP hasn't broken through this OB yet, I'm a bit nervous about putting a trade on this OB. To be honest, I'm a little bit nervous about that. I would prefer to see price come back down and watch it on the 15-minute chart and wait for a big move up. If we do that right here, let's zoom right in. Let's have a look at the 15-minute chart. Let's have a look at what that would have looked like. So price came down here into our 1 hour OB. Bam. Cool. If you're lucky enough to get that trade, fantastic. How could you have known that that was the point to get in on a trade? Just because that's your level of interest, that's where you're looking, doesn't mean you just have to gamble and take a guess. Alright, there are other ways you could have got in. Watching this on the 15-minute chart, you can see prices come into your area of interest. And it's bounced right off with a big move up. Fantastic. Hasn't broken structure yet. It's still just a red candle. We've had a drop, base, and a rally up. Alright, now the rally up, we've broken free and we're at a demand zone. This is a good opportunity to be looking for a trade. You could have taken that OB there, which you wouldn't have actually got in on that one because the price didn't come back down to that. That's unfortunate. It's very unfortunate. So I would have missed out on that one. You could have watched the price come up and break through again. You could have taken it right there. So we had a big move up right here. Take this OB right here. If you were clever enough to pop your long at the top of this, and this is something you might want to consider doing. I don't always get these trades in, but if it's not at the bottom level on a big 1 hour OB, if I'm looking at a 15-minute OB, sometimes I'd be looking at taking a trade where my entry point is the top of the OB and looking to see where I might be able to take that to. Look on the left side here, we can get an easy 3-to-1. Easy 3 risk to reward at the top of that OB there. So this is a probable trade to get in on. That's fantastic. That is how you can get in if you miss your trade. As long as you're remembering where the discounted price is and where you are in terms of that. Now, let's assume that you have been trading and you've taken that trade. We've seen here that, let's look at the 1 hour chart on this one. We've had price come in, we've got a higher high, a higher low, higher high, higher low, higher high again. Things are looking good. Our first trade, our first long was successful. Maybe we took a half profit and we probably set ourselves to take a full profit if price came back to a certain level. Because from this point here, we had an even low. What do even lows mean? Even lows means this. Stops. Stops were put there. Right? Retail traders are coming in, they're putting their stops there. Price didn't make it to a new higher high. Price decided to come down and eat those stops up. At this point here, your sentiment has changed. You're no longer bullish, you're bearish. Now, you might think, let's look for a short, but you need to remember, this is not the area in the chart that you need to be shorting. Rule number 2. Rule number 2. What is rule number 2? Let me get my exact wording here. No, that's not. Oh yeah, never trade at 50% of the range, but that is not the right rule. I should be looking at rule number 1, which is get help. No, rule number 1. You guys remember rule number 1? Is rule number 1 showing? Is that rule number 2 still showing? Hopefully rule number 2 is off. Let me just double check that. Yes, rule number 1. Rule number 1. Shorts at premium prices, longs at discounted prices, and not the other way around. Right? So even though we could see the price was going bearish, we are not taking shorts. Not at discounted prices. Okay? That's like saying we're going to take a bet on how far the discount's going to go. Well, we don't know. I mean, look, the trades that I just placed on ETH, I was looking for a 70% retracement. 70% retracement is right here. And look, in this time, price even went through that. So you don't take a short from there to there thinking, hey, I'm going to get in on a quick trade. That's a retail mindset. You don't want to do that. Don't worry, I'm going to fix that rule number 1 trigger. It's not going to trigger help anymore after the stream. All right. So even if you had to put your trade here at the 60% mark, there was a risk here that you would have lost your trade and it would have hit your stop. It would have happened. But could you have gotten in on this next OB? Right here, we had the 8-hour supply, 8-hour demand zone, 4-hour OB, and a 1-hour OB. I still wouldn't have got this one, unfortunately. If I'm being honest, I would have definitely liked to have got it. But my 4-hour OB, if I'm following my own rules, it wouldn't have been triggered at that 50%. It wouldn't have been triggered. It would have just missed out. And that happens, guys. That can happen a lot. Sometimes you can just miss out. And you think, damn, my friend got in. My buddy over in Onyx Crypto, he got in. I missed out. You get a bit of that FOMO. And you start to think to yourself, well, maybe I should just quickly jump in and raise my price. Don't do that. Look at what happened when I just raised my price. My risk to reward ratio went from a comfortable and lovely 3 to a 2.3. And what that does, if you've got your actual order in the order book and you're editing your order so that you can get in on your price, it increases your risk. Moving your price up means you're going to lose more money if you actually hit your stop loss. That is a huge mistake, massive mistake. You can go from a nice comfortable 5% risk to a 10% risk or more just by moving your parameters about where you get in on your trade. Don't mess with it. If you don't get in, you don't get in. Now, if your idea was to take your trade from here and take it up to here, it doesn't mean you're out of a trade. It doesn't mean you don't get to play. Just because your big trade didn't get triggered doesn't mean you can't try and go down onto the 15-minute mark and try and find a good order block to get in on. Let's have a look at that. So my big trade didn't come in. What can we do here? We've missed it. We've had a big imbalance coming in here, so I'd be definitely looking at this zone here for a retracement, but it didn't happen. We didn't retrace there. Prices come down. Prices come back up. Prices come back down, and we've had a base here and a big push up. Big push up. There are a couple of good things that happened here. Number one, we have a breaker block right here. Right? So breaker blocks are really, really great. How much is this retrace? Let's have a look. Price started just down here at the lowest. And if it came up to there, oh, that breaker block sitting at 50%, not quite what I would like. Not quite the discount that I'm looking for. So I wouldn't have gone in on that breaker block, but it was there. That was an opportunity that some people could have got in on. That price wasn't discounted quite enough for me. But from there, prices hit a point here, prices hit a base, and pushed up. All right. Now we are in the middle of our push up. This is right in the middle of where we want it to be. This is a great order block. Last down candle for a big up push. Broken structure here. Broken structure right here. As it pushed up, we've retraced. 50% from there. How much are we retracing from this? It's looking like a great discount to me. I would have put my long right in here at the 50% mark. Swing low would be nice. So you need to make sure you're targeting your stop loss at least 25% of your OB. What rule is that? Rule number 4. Stop loss at least 25% of the OB. Now this particular stop loss, I've gone even further. I put this under the swing low. Price came up, swing low. I want to make sure that I'm safe. Now where can I target? I need to make sure I can get a 3-to-1. Where is a good target? We do have price coming down here, but that's not a particularly strong OB. That's just price coming down. This point here, we have an OB and a drop. Drop, base, drop. So my target 1 is this OB right here. What does that give us? 3.39, 3.29. That is a fantastic trade right there. That would be my stop 1. And stop 2 would be my original take profit too would be my original. And look at that. Original was a 6.24 return on our risk. This one is a 10. 10. Which one would you want to be taking? I'd want to be taking the 10. That's a way cooler option. But for me personally, why not both? Let's take both. That is a great trade. I wish I took it. I wish I took it. So, okay, here's the plan. Big trades at the higher time frames. If you don't get in, don't panic. They're the nice to haves. Smaller trades at the 15-minute time frame within our larger trade. Okay? At a good level. All right, where to from here? XRP. We've seen what I would have done, what I would have liked to have done. Now, price for XRP within our price structure here. Now, we're looking at this from the 11th of November. Even though we have a 50% right now, even though we're in discounted prices. Even though we're at discounted prices, the range has changed. Since November the 9th, the range has changed. Let's take another fib from the top to the bottom. All right. Is that really the bottom? Not quite. Hold on, let me do that fib again. Taking my fib from the top of the range of this price structure to the bottom, which is this part right just down there. Let's draw another 50% mark here. Okay, now this is the important thing to think about. While we are at discounted prices in terms of the larger time frame scale, on the smaller time frame scale, we are at premium prices. This is not an area where we should be taking longs at the smaller time frame. This isn't where we should be taking longs. We could be up for some shorts. What worries me, well, not worries me, doesn't worry me at all. But what I'm thinking though is not to take a shot from the top of this particular part of the structure. I will be looking to the left here because we have all of this liquidity built right here. Look at all that liquidity that we mapped out before. Let's see if there's a 1 hour OB at the top here. Oh, look at that, there is. And it seems that this is the 1 hour OB that's fueling the rest of the chart. Last up candle before a downswing. A 1 hour OB sitting right here. Price came back into this OB and boom, went straight down. Price hit this OB, just the tip. It wasn't a strong reaction. But it created a fresh new OB. Right here. Fresh OB has been mitigated. That would have been a fantastic short right there. But that is now mitigated. So what I'm thinking is the next time the price comes back up, it's probably not going to hit as much liquidity here because the liquidity is all up here. I would be looking at taking a trade at the 50% mark. This would be one of those high level trades. A high level trade where I can take smaller, low level trades once it's in. Or even if I miss this trade, if it doesn't quite hit my mark, I can still take smaller trades on the structure that's formed. Because this particular trade, I'd be taking all the way to the bottom. Right there for an 8.36. That's my XRP plan. I'm not going to be doing a trade here because it looks like all the liquidity was wiped out. But there's still liquidity up here. And it will get taken out. Might give myself a tiny bit more room on that. Let's just make sure I got 25%. Remember that rule? Rule number 4. Stop loss at 25% of my OB, set to where my bias will be wrong. Oops, we'll do it from the bottom to the top so that I can see where my 25 is. Bottom to the top. 25% is right there. So I'm above my 25%. I've got plenty of room. Ticking all my boxes. That is a trade that I'll be looking for. And then once we hit that mark, I'll be looking for smaller trades within that trade. Or if I hit that mark but I don't quite get my trade in, if we come up close to it but I don't get triggered in, no big deal. I'll be looking for trades, the price structure that forms at this part here for a short. That makes sense to everybody? All right, now if you guys who are watching this and you're not in the Onyx group and you have no idea what Onyx is, well, Onyx is the trading training platform that I'm in. I didn't make it. We have a coach, Nick D, who has taught me everything here and coaches us daily. He does weekly streams and he does them on YouTube. You can actually watch his YouTube channel where he'll give you some free information. And if you want to learn what we do, you can head over to onyxstrategysession.com. When you talk with him, when you make an appointment to go and talk with him about entering our training, just mention me. Mention Obi-Wan Assassin, the Auto Block Assassin. He'll know what you mean. We will be setting up some kind of affiliate system later on. But for now, if you want to learn what we do, if you want to learn how to trade and actually make money and become a shark and not just a retail trader, if you don't want your stops to get taken, head on over onyxtradingsession.com. I'm going to make that a pop-up little bit of text so you can look at that later on. If you like what you're learning here and you want to learn more, make sure you follow me. Make sure you follow me. You'll get notified when I go online. All right, so I'm going to wrap this up for today, but no, not quite yet. I want to put this trade in. What am I doing? I want to put this trade in. So XRP, let me just confirm for XRP. For XRP. Let me just check. What is my margin's 25. All right. $420. That's my current account balance. Started at 100. Got to 500, made some mistakes. Don't make the same mistakes that I'm doing. Make the good trades that I'm doing. call me out when I'm about to make a fuck up. That's for sure. That's why you're here. That's your job. If you're watching me, that's your job. Learn from me and tell me when I'm about to break my own rules. Because it happens. Watch me fuck up. Watch me break my rules so that you don't do the same. All right, we're taking a short on XRP. Hold on a second. What am I doing? I'm almost breaking my 5th rule here. We don't make shorts. Oh, no. We don't do shorts when Bitcoin's going long. I need to write that down. Rule number 5, and I'm going to have to make this a new rule that'll pop up on the screen. We don't go against BTC bias. So while this trade is a perfectly valid trade, perfectly valid, it looks like XRP will come up there into this big supply zone. And it's going to drop, for sure. Ah, Fred Daggy. Hello, Fred Daggy. Thanks for the chat. All right. Rule number 5. I haven't added the text for this. I'm going to do that after the stream. Rule number 5, we do not go against the Bitcoin bias. Yes, this could be a valid trade, but it's not a valid trade right now. Because we're going long on Bitcoin. Bitcoin is at the bottom of its range. We are still thinking long. I may not be taking a trade right here and this 50% goes. I won't be making a trade here. That is the 50% price. We do not make trades at 50%. But I'm still long on Bitcoin. We're still from the bottom of the Bitcoin range heading to the top. And for XRP is in a different position. It's nearing the top of its range. What's going to happen if Bitcoin continues to go up? Is XRP will come up, and it may trigger my trade here. It may sit here. Fred Dag. Well, the entry price there was going to be 0.4048. That was going to be where I did my short for XRP. But if Bitcoin comes all the way up here, yep, for XRP, don't put this trade on there. Well, you can do what you want. I'm not here to tell you what you want. I'm here to show you what I'm doing. Entry price was potentially 0.4051. But I realized what a huge mistake I might be making. Yeah, the price might come up into here, into this massive supply zone. It very much could do that. But for Bitcoin, what if Bitcoin keeps going up? What if Bitcoin comes up through this 50% of the zone and moves up to the top here? What's going to happen for XRP? It's going to hit my stop loss. XRP could still go all the way to the top of this range. So I'm taking this off. That is not a good trade. Somewhat valid for this last 14 days of this range. Somewhat valid, but still in the bottom half, in the discounted prices of our overall larger structure since November, since before last week. Damn. Glad I thought about that. Nearly made a big mistake. That would have been terrible. This is why I'm here, guys. This is why I'm doing this on the stream, so that I can talk my way through these, mumbling to myself like a madman, but getting better and improving my skills. You love my insights? Oh, thanks. Thanks, Freddie. It's actually quite fun giving them. If you do want to know more, we do learn from Onyx Crypto. We'll probably do a Google search. We got loads of us in here. How many people are in our group? It's not my group, by the way. Not here to make sales in this group, but there's stacks of us. Like I can see over 100 people in our trading group. I'm the only streamer so far from the trading group. I don't think everyone else is quite as willing as I am to make a fool of myself and share my fuck ups on stream, but I'm here now. And if you are watching me, I've started with $100, up to 420. I'm hoping with this stream will push me to make better trades, make better decisions, and you're going to watch that account size grow. And hopefully go back through my old videos. All the old videos will be sitting on YouTube. You can go back and see where I started. Don't do that now because I've only just started. Oh, you're in there too, Nick? Cool. Well, you should be streaming too. Let's make a whole community of Bitcoin streamers. Or crypto streamers. All right. So I'm going to leave XRP. We're in no position for a short. The only way that I'd be interested in XRP is when we hit the bottom of this price structure here for a long. So I'm absolutely going to avoid this. Not where we want to be at all. All right, BNB. BNB was a similar situation. The price chart has kind of flipped from where Bitcoin is, and we are in the middle of this 50% zone. We have a lot of stops here that are ready for taking. A lot of stops. I'm expecting the price to come back down, and when it does, I'll be looking to take a position in this demand zone. Can't remember, was this an 8-hour demand? Might be, let's just double check. Yeah, that's 8 hours. So there's a huge demand zone here. Now, I could drill down further and find a great entry point. The thing of note is we haven't hit this before. Like, we've hit it once, but we haven't come back for it again. Since we hit the 50% of the range here, we've been stuck there. And we have a lot of stops. Remember, retail traders love their trend lines. We've got a bunch of stops here. All the way along here. Especially here. And look, they all got eaten. Well, actually, I don't know if we got stops up there, to be honest. Probably do, and they probably did get eaten. But we've had stops along here. We had stops along here, and they're all waiting. We've had even highs, even lows forming here. Stops. Stops. And more stops all along the way here. We've had even highs. What do even highs mean? Stops. Stops. And stops. And what happened? Smart money came in and wiped the whole slate clean. Look at that, all the way up. Taking out all of these stops. Clearing the playing field. If you were lucky enough, not lucky enough, if you were smart enough, I wasn't, to be watching the chart, and you had your short here because this was a fantastic zone. It was a fantastic supply zone. The price came down there, leaving a bunch of people who wanted to sell at this premium price. That's a supply zone. That would have been a perfect place to pick up a short, and I wasn't watching BNB. I don't know why. I was just watching the other charts. I think for me, I'd seen BNB come in, and BNB had, from my perspective, in my own opinion, it had followed the Bitcoin chart and the ETH chart really closely. So for a while there, I was like, why might I bother looking at these altcoin charts? But I'm seeing all of a sudden now, some of these altcoin charts are charting on their own, which is bringing up more opportunities. Freddie, you're driving in New Zealand now, 100 kilometers an hour, listening to me. That's fantastic. Glad you're enjoying it. Well, I assume you're enjoying it. Thanks for watching. Whoops. Listen to myself. So you're driving in New Zealand for 100 kilometers. I didn't know New Zealand had 100 kilometers to drive. No, I'm just kidding. I know it does. I'm just kidding. Where are you driving from and to? I got friends in New Zealand. I'd love to go there. I got friends living in, what's that beautiful lake? What is that lake called? I can't remember. Is it Elizabeth or something? My friend, she's got these awesome Airbnbs. I think it's called Elizabeth Town, I think, and all around this beautiful lake and lovely surroundings. I'd love to go there one day. Anyway, back to charts. If you had taken your short here, that would have been fantastic. Where are we right now? All right, so we've come up here. We've had our higher highs. We've ranged, and we've had a higher high here. We could be seeing possibly a new higher high, which could come and test this supply zone here. I'd be looking at the price action in there to see Wanaka. Great. I'd be looking at the price action here to see what I want to do. I'd probably be looking for another short, but knowing that the short from here, once we've already mitigated this level, might not be as strong as reaction as before. So we need to make sure. That sounds more familiar. Wakatipu, Queenstown. Yeah, that's it. That's the one, Queenstown. Beautiful area. Once we hit this, might not see a big price reaction that we did before. Might not come all the way down. It's still a valid place for a short, in my opinion. But I'll just have to make sure that I protect it. And when I say protect it, I mean making sure that as soon as it comes out of my price range and into profit, that I set my break even. So I've been moving my stop loss to where I break even. And when I do that, and I do that quite a lot, I know I've seen YouTubes from traders saying that is not how a professional trader trades. But you know what? I call bullshit on that. Protecting your profits is exactly how a professional trader trades. And when I protected my profits, I've made profit. It's that simple. When I don't protect my profits, usually I lose. Because I'm finding when I'm right and the price has done what I thought it was going to do, it doesn't do it 100%. Rarely it will do 100% of what I'm planning. Most of the time it's going to do what I thought it was going to do, and it'll come into the price range, it'll come down to 50%, and I'll be thinking, wow, I should just stick to my TA. I should just stick to what I know. And I thought it was going to do this, and I watch it sit around this price point, and I watch it come up and go right through my stop loss. When I could have taken 50% of my profit off the table, and I could have set my stop loss to my entry point, and I could have walked away with the profit. Instead, I walk away with a loss, and I don't want to trade like that anymore. So that is not what I'm teaching. I'm not even teaching. That is not what I'm doing. That is not what I'm going to do anymore. So when I move my stop loss back to my entry point, I don't stop at my entry point. I usually move my stop loss so that once I'm in a good profit, the most amount I can lose will give me a 5% profit. And the reason I do that is because usually not usually, there's always a trading fee. And if I sat here and just set myself to break even, I'm going to still lose money on my trading fees. So I still want to get enough profit to cover those trading fees, otherwise it's a loss. And that's what I've been doing now for a while, and that's what I'm going to keep doing. So this is option number one. We have 3.2 here. 3.2 risk to reward on this BNB short if it does make it up there. If the price does move down, I'd love to see the price break through. I'd love to make that short, to be honest. I'd love to see it come all the way down here. That would be phenomenal. But what I suspect is going to happen, what's likely to happen, Bitcoin is going to probably continue. Let's have another look here. It looks like Bitcoin could break free and have an upward movement to the upper half of this structure. I'd love to see that. I think that'd be great. Then what that means for BNB is we could see the same thing happen. BNB could come up and hit the top of this structure. That'd be phenomenal. But if Bitcoin fails from here, which is also just as viable, this price is random. We cannot say that we can predict it. If Bitcoin fails, BNB is going to come down and it's going to break through this zone here. It's going to come all the way down to here. So within this particular zone that has never been tested before, all right, There will be an order block in here, and it will be what tells us where the demand is, right here. Whoops, we're at the 2 hour. Let's have a look at the 1 hour. Let's make sure that we're looking at a nice proper 1 hour zone here. Let's see what happened. Let's walk through this very carefully. Price came down. Price did a base. We had a price drop again. And we've got a very big decision candle here. Doji. From there, price has come up. Broken structure. Come back down again for a base. And a nice big rally here where there's really, really broken structure. So where do we want to take this? We could take somewhere within this area here is the correct OB to take. Now, from my experience, whenever I'm looking for the right order block to take my trade from, and remember, we're talking about supply here. Sorry, we're talking about demand here. Once the price leaves these areas of demand, traders who have a lot of Bitcoin, in this case, a lot of BNB, are still wanting to get the right price. They're wanting to buy. I'm saying this wrong. Once the price leaves this area of demand, people who want in are looking to buy at these cheaper prices. So they're looking to buy at the demand price. This particular candle right here, and I know I'm drawing boxes inside of boxes inside of boxes, but this candle inside of here, this is the order block pertaining to where people are wanting to buy their BNB. I want my BNB to be this price here. Between 190 and 183, or no more than 190. And prices come up and broken structure, come back down, and you can see in that tip there, it has broken through this OB here. So this is the one that I want. In my experience, when I've tried to make sure that I get the trade by targeting the range above, when there's two ranges that are close, and I target the one above, nearly always price just disregards that and comes back down. Nearly always. And I always sit there thinking I wanted to make sure that I got in the trade. So I took the OB that I thought would guarantee that. But price had another idea. Price doesn't care where I think the price is going to go to. Price is going to go to where people wanted the price to be. People wanted to buy at 190. So that was where the price stopped going down. That is the OB that I'd be looking at. There are many OBs you could choose from, but this isn't about order blocks. This is about supply, and this is about demand. No one gives two hoots about where these order blocks are. They're just blocks of orders. That's all they are. What matters most is the demand. Or the supply. In this case, demand. People are wanting to buy for a cheaper price. And when people are wanting to buy for a cheaper price, and that price has been shown to them that you could get it if you waited, if you were patient enough, you could get your BNB at that price. That is where people will want to buy it. Will we see BNB come down this low again? I hope so, because I would love to take a long from this position right here. That would be ideal. And with these types of trades, I'm greedy. I'm a greedy man. I want a big, fat discount of 50% of that OB. 50% of that demand zone. That's where I want my discount to be. This gives us a 6 RR at the bottom of the next biggest OBs up. Even at the bottom of the range of that price move up, gave us a 4. Even at the bottom of the closest OB above, we're getting a 3. That's a good trade. I love this. I want in on that one, and I'm going to wait for it to come in. Once price does hit a level down here and show me that it's going to return, because if we want to find where price, what's my trade entry for the short? 490 cents is my entry. 490 cents. What I'll do, guys, is I'm going to share this chart in the chat. So if you do want to know details of this chart, we'll share the chart link. Bearing in mind, I could still bloody paint on this chart a bit more. All right, so if price does come down and we see that it turns around, what's a likelihood? If it doesn't quite make it to the very bottom of the chart, where would a likely entry be? Using our fib, looking for anywhere between the 60 to 70%. If we wanted to make sure, not make sure, but if we wanted to take a trade, take a long here, thinking that we're not quite at the top, we could hit the top again, only place I'd be willing to do that would be right here. We have an 8-hour demand right there. Let's have a look at the 1-hour chart. Yeah, that looks good to me actually. Sitting between the 60 and 70% retracement from the top. Now this particular trade has already been hit. That looks to me to be an area of interest from back here. Let's see how far back this goes. It's not even the original. We've come back down, we've mitigated this particular breaker block once, twice, 3 times, big push up, hit it again and another push up, but this time it went all the way to the bottom. Went all the way to the bottom. So, where could next be? I'd probably be looking at this point right here. It's still between the 60 and 70% retracement. It was the original order block that pushed the prices up. So there is still a very big level of demand right here. People are willing to buy Bitcoin, to buy BNB at this price. And it's below these stops here. For me, I would suspect if the price does come back down, we'll at least get a reaction off here. I would hope to get a reaction that pushes price above, way above. So I'd be hoping to take a long here. Oops, that's the wrong place. I'd be hoping to take a long here. And take that all the way up to the top. If we break through this point here, then I'm looking to take a long at the bottom. I think this might be a good trap for retailers too, because they'd be expecting the price, if it does break through here, they're expecting the price to drop to the bottom, because they've seen this line of resistance here. But really, really smart money might just come in and take these stops and bounce right back up. And that's what I would be looking to do. So those are my picks. I've got enough trades in the system right now for the moment. I may stream later on tonight. I may stream tomorrow, and we can talk about this some more with some new information from the price action. And from there, we can decide what to do. But I am going to leave it there for today, guys. I hope you've enjoyed this session. Hope you can catch me on the next session. And I'll see you again.